This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. You are listening to your daily dose of daily market wisdom with master trader Nick Santiago. Today is June 11th, 2020. This is show number 53. So as predicted, Nick, we're seeing markets sell off, and just go with your rule of thumb that seems to be working lately.
Yeah, I mean, every time we see a Monday rally, normally we're going to do some backing and filling. Today's a little bit more backing and filling than what we've been accustomed to seeing. But again, it's nothing unusual. There's nothing out of the ordinary here. In fact, I welcome this because it'll give me an opportunity to get into some setups. As you know, I'm really just sitting on 3 trades right now, and I'm not entering much because things are just too high. They're not discounted now. So I actually think today is really more of a technical sell-off than the news media is making it out to be. I mean, you could just turn on the news and you hear 9 million negative things today. Yeah,
that isn't that the truth? But the media usually has it wrong, right?
Oh, they always have it wrong. It's not usually; they're always wrong. The charts. The charts tell you everything you need to know. And, if you just take a look at what, they're blaming this today on a spike in coronavirus cases in Texas. I mean, the people don't realize we're testing so many more people now.
Yeah.
Of course, there's going to be a higher rate. I mean, the testing has gone up exponentially. So, I don't really buy into that scenario what the news is feeding us. But the real reason is, and I outlined a few, it's just that the spiders were overbought in the near term. I mean, they've had a tremendous run. We're looking at one of the greatest rallies in history over the last, 70 calendar days, 75 calendar days. So it's been an incredible run. And we went up into a level where, if you take a look at a daily chart, and I'll make it easy, just look at February 25th. The February 25th was where we had that first major sell-off day. So what happens that in that session too, we had about 219 million shares traded. So, and that was a big wide range sell-off day. So just think about it. If you've been holding the S&P 500 at that point, you were a buyer and you held through this whole downturn, what are you going to do when you get back to break even? You've been in pain for so long, you're just going to take it off the table. Yeah. Right. That's what nature dictates. You've been in pain. There's only 2 motivating factors in this world. It's pain and pleasure. And, you've been in pain for so long. Now you're actually, relieved. I'm no longer in pain. Let me get out of this thing. I can't take it no more. And that's just a natural psychology of the market. So we went up into that February 25th high. And it wasn't the all-time high. The all-time high was made on February 19th. But February 25th was the first big major sell-off day where you had 219 million shares traded on the downside. So, again, that's predominantly the main reason. Another reason is that we've recently seen, next week I just want to point out that you have options expiration. So I know we didn't talk too much about that, but next week is going to be quadruple options X. So it's going to be where the June contract expires. There's going to be rollovers. There's going to be lots of exercising of options. Plus you have quadruple witching, which means you have 4 different asset classes expiring the same week. And that occurs once every quarter. So, there's a lot of game playing, as you know, and I've told the viewers already, the listeners, that Options X is always an institutional game playing week. Sometimes it'll start a little bit early. We had a really low put call ratio as well over the past week. I mean, some of the readings were, 0.60, 0.50. These are low readings. That means you have way more calls in the market than you have puts. It's a contrarian indicator. And it works very, very good for short-term stuff. So, again, we were due to pull back. That's why I haven't been jumping on board and entering, new positions up here. And the positions I have that are in the money, I'm just trailing it and letting them play out, So, again, this is all part of the chart. These are all factors that you see every day in technical analysis.
Yeah, so it's interesting that spider has become such a leading indicator for where the market is heading?
Well, for me, it's always the most important index. Just simply, a lot of people use the Dow, which I don't really love. That's only 30 stocks and it's price cap weighted. The S&P 500 is you're looking at, 500 of the best companies in the world, and it's a market cap weighted index. So for me, the S&P 500 is what I do my work on. It's predominantly, in my opinion, the most important index, even though people will look at the NASDAQ, because it shows leadership. We'll also look at the Russell because it represents small capitalized companies in the United States. These are all very important, but you don't get a better feel or a better read on the market than using the S&P. And for me, that's been my baby for, over 20 years, and I don't see any reason why I'll stop doing my work on the S&P 500.
So over 20 years, huh?
Yes.
All right. Well, so put-call ratio, just educate us a little bit about that, what its significance is, Nick.
Yeah, so just to really make it simple, when the put-call ratio is 1 or higher, that's a very, very bullish reading in the market. When the put-call ratio is obviously below 1, that's a bearish reading. That's just the parameters that are set. But the reality of it is, if you have a low put-call ratio reading, that means you have a lot more calls in the market. And the market, institutions know when everybody's on the one side of the boat, you got to get on the other side of the boat. So recently we've had very low reading, 0.60, 0.50. Those are very, lower than 1. Those are very bearish readings for the market. And hence we got, a major sell-off going on today.
Yeah. And of course, the naysayers are going to say this is the beginning of the retracement back to March lows and will go below what happened in March. Does this make the VIX like a good buy right now or what?
Well, the VIX has had a big pop today. So the VIX right now, as we speak, is up about 12%. It's up $3.45. So you got a really good pop. But, I've told my listeners over the last few nights, and I didn't get into the VIX because I still believe it's going to go lower. But what I told them over the last few days was the VIX went down to its 200-day moving average. And I said, technically, it should bounce here. I really don't know how much because ultimately my math is telling me the VIX is going to go below the 200-day moving average. But in the short term, I said for a few days here, especially since we had a Monday rally in the S&P 500 and the other indexes, the VIX may get a little bit of a bid, and it's higher today. So, ultimately I am still in the camp the VIX is going lower in the bigger picture. Next couple of days, could it retrace up to 33, 34? Sure, but I don't see it going above that.
Interesting. So this is just a short-lived kind of little downturn here.
Yeah, and it may, I hope it lasts for a week or two, to be honest, because that'll give me setups. Right now, I'm running out of trades, right? I can't, it's against my trading religion to buy things up and chase markets high. It's just not what I do. I buy things when they're on sale, when nobody wants them, when I find the support levels, when I see the patterns. That's when I get involved in an equity. I'm not looking to get involved in an equity when it probably has, a point or two to go before it hits a major resistance point. And that's what we had in the market. And something else that I noticed over the last few days, and a lot of my members noticed it as well, there was a little bit of a dash for trash. You had a lot of micro biotechs that were doubling in one day. You had all these small floaters starting to run. So when that happens, usually you're going to be in for a pullback, maybe even a correction. There's even a stock out there that's gotten pretty popular over the last couple of weeks called Nikola, NKLA.
Yeah, right.
It's a competitor to Tesla now. I guess it's an ex-GM General Motors executive that started it. Mm-hmm. But, this stock in May was trading around $13. It went all the way up 3 days ago to around, $94. That's parabolic. That's ridiculous. So when things happen like that, it just tells you, reminds you of the old chart we used to talk about with the space, galactic space.
Yes.
The same thing. When you get those kind of moves, mm-hmm. There's a lot of froth in the market, and you gotta take that out. So, market makers, especially around Options X, and this is not a regular Options X coming up next week. It's a quadruple witching options expiration filled with excitement, filled with game playing. It's the real Shark Week next week, so get ready for that.
Yeah, so you stepping aside for next week? What do you think?
No, I don't step aside. What I do is I just do my math. I just look at the patterns. I let the charts come in and give me a setup, and then I'm going to be a buyer.
Right. So we're going to see all sorts of crazy gyrations coming up next week, huh?
Yeah, so a lot of times what will happen is stocks that are in the stratosphere have had big runs. And we'll just use Apple, for instance, right? Apple's made a new all-time high recently. That's vulnerable to a pullback. I'm not saying it will pull back, but you got to be prepared that it's vulnerable for a pullback. And then you get stocks that are, beaten up and in the toilet bowl, so to speak, and they're, they're down and out. They're the stocks that usually will get pops. They'll see some kind of upgrade or some kind of rumor that they're going to merge or a private equity firm is going to take them over. Yeah. Something ridiculous will come out. You see it. It notoriously occurs right around, Wednesday, Thursday before the options week. Options expiration is obviously going to be not this Friday, but the following Friday. But the whole week is filled with game playing by the institutional money crowd.
Mm-hmm. Yeah. Interesting. The more things change. So, jobless claims today, down, another 1.5 million Americans file for unemployment benefits. And to give you an idea of the perspective, before we were like at low 200,000s before COVID-19 hit.
Yeah, so jobless claims, they came in this morning at 8:30. They were reported. And again, pretty much as expected. This was not a shocking number. I think it was, let me see right here, 1.54 million. So, yes. Again, that's probably pretty much in line what we expect. I think that number will actually drop now even further going forward. But this is not the headline number anymore. Now we're reverting back towards the monthly number, which comes out in the beginning of every month. And again, things are opening up across the country. Let's see how things progress. But I have to say, just being where I am in the west coast of Florida, I have to say things have dramatically improved. I mean, everything is open now. So it's nice to see. Hopefully things will go well. And again, if you had a really, really terrifying virus scare, the markets will get shaken. But I don't find that to be the case yet.
Yeah, well, one thing I've seen is that YouTube views and podcast views are down because there's less people at home with nothing to do but to listen to podcasts and watch videos. This is a indirect indicator, but it tells me that more and more people are getting back to work. Even in the blue states, you had Pennsylvania, their legislature just end the state of emergency. So I don't know what that means in the scope of things, but it should mean that Pennsylvanians will be getting back to work because the emergency doesn't exist and the governor's proclamations have no effect.
Yeah, and, again, we have a lot of political stuff going on in the country right now. That's not going to change. This could be, one of those years where, you're going to get so much occurring, especially going into an election year, presidential election year. So, again, the forecast for 2010 was a panic year. It's also a year where we're going to have increased volatility from time to time, and you're also going to get a lot of whipsaw, both up and down on a day-to-day basis. But, I know people are freaking out because the Dow is, down 1,000 points today. But we've just had one of the most amazing rallies that we've ever seen. Now, could this be it? And sure, anything is possible, but I'm not seeing that in the charts yet.
Yeah, not there. And you said we're going to get this tremendous volatility. We're going to get whipsawed back and forth. But the trend is the trend. And, it's remarkable, Nick, when you see how much of the loss of March's losses have been recaptured.
Oh, it's been amazing. Honestly, it's been one of the fastest comebacks. But historically speaking, in bear markets, you do get big advances. You do get big 2-month rallies. You get sometimes 3-month rallies, and then you can revert back down. The difference this time around was the NASDAQ was able to make a new high, and the NASDAQ, is also a risk-taking index, right? People go into the NASDAQ for growth. They're not going there to park their money to collect a dividend. So, that's a positive. The Russell 2000 also had a really, really good recovery, but the Russell's been the laggard of the market since 2018. That should be noted. So, again, that's not even near its all-time high, which occurred a really, really long time ago. And you have to go, all the way back, I believe, into August of 2018 to find the Russell top. So, again, you always want to see the Russell and the NASDAQ show leadership together. Excuse me. When they do that, that's a really strong, a very, very strong 1-2 punch going forward. So, we'll see where we go here, and we'll watch the pattern. And I think right now the bottom line is that the chart pattern, we'll see how it sets up into options X by the end of next week.
Yeah. Interesting times for sure. And sectors, we're still watching the same sectors and looking to re-enter them when the chart tells us to. Yeah,
and that's this is just goes to the point of why you got to be patient in this business. I know everybody wants to jump on board, and I saw it on Monday when we had the big rally, how excited everybody got, and I was like, well, yeah, it's very exciting, I guess, to see the S&P up so much and all the other major indexes. But the reality of it was we're going up into a major, major resistance point from February 25th. Until that level is cleared, especially on a weekly basis, these markets can do a lot of backing and filling. And, again, we had another big Monday advance, and, now you're doing some backing and filling today a little bit more than what we've been seeing as of late. But this kind of happened, Kerry, last options X too, if you recall.
Yeah. Yep, absolutely. And this one will be even more volatile because it's a quadruple witching hour, as they call it. And, it's interesting because like 15, 20 years ago, 25 years ago, there was a lot more attention paid to options expiration. It seems like the street and the press, the financial press, kind of just don't pay attention to it anymore.
Yeah, that's a great point, and it's very true because they don't want you to pay attention to it.
Yeah, so this is where the suckers, basically the sheeple get shorn of their money, and the money gets taken away from them. Options is so fascinating because no other sector of the market do people uniformly lose money regardless what the market is doing, whether it's going up or down. The options purchasers always lose money. Is it just because they're gamblers by nature and they just don't understand that they're playing with dynamite?
Yeah, I mean, most people that enter the market are gamblers, and then they'll lose, and then they'll hate the market, and they'll come back again when they
never again.
Yeah, right? I mean that seems that's why I always tell people there are so few real traders in the world. We're a small group. We're not really. I always tell everybody I'm like the remora. That's that fish that swims next to the shark.
Yeah.
So I just trail the shark, and I just eat his breadcrumbs that come off. And that's kind of what. What we do as traders. But most people that come into this business, unfortunately, I hate to say it, but I say it these days. I speak my mind. They're gamblers, and, they just want action. I see it with my own membership. When are we getting a new trade? I must have got, 20 emails the other day asking why aren't we in this trade or that trade? And, now they see why.
They're punters, as the Brits would call it, right? Punters?
Yeah, that's it.
I love that better. It sounds better than gambler.
It does sound a little nicer, but they're a little bit more politically correct.
All right, so Nick, I want you to put together 5 rules for making money in the market for our next show. Okay, your top 5 rules, and one of them, I guess, the top one is always going to be don't gamble. Right?
Yeah, and I could tell you another one too is don't chase markets at highs. I mean, I can't tell you how often this occurs, but just think about, the poor person out there that bought SPCE at $42 a share when that stock went parabolic, and now the stock's at 15, right? So, again, I'm just using that Virgin Galactic Spaces because it's such a good example. But, just think about that. There's somebody out there that actually owns those shares around $42, and they may never see that level again.
Yeah, that is, and there were a lot of people up until 2008 and 9 who bought gold at $850 an ounce and still had it in their safe deposit box and never saw a profit till it took off then. I mean, it's always a risk when you're buying it at the high. That parabolic chart never fails to disappoint, right?
Oh, it's a footprint of human nature. It's a footprint of euphoria. And, there was a great market timer out there years ago, Sir John Templeton.
Oh, sure.
And
we loved him, yeah.
Yeah, John Templeton, I'll never forget, because I really studied a lot of his work in my early years, and I always found him to probably be the most fascinating out there, because he had this one statement, that markets top on euphoria, and a lot of people think it's just the broad index, but it could be an individual stock.
Yes.
And that one lesson told me years ago not to chase markets at extreme highs. Just wait, be patient. Who cares? Right. Take a vacation if you have to. And if you ever read anything or any of the stories about Jesse Livermore,
Sure.
Some of his biggest losses that he ever took were when he broke his own rule, and that was chasing a market at a high. And, even though he wrote, I love watching stocks make new highs, I think they're buyable. When they go parabolic, they're not buyable. And, we just recently saw a bunch of really micro cap biotechs, do doubles and triples over the last week. And that's kind of, that's a foretelling signal that the markets have to pull back in. I'm not saying this run is over or we can't, chop around for a while. But again, you just wait for pattern. There'll be setups out there. Exercise patience, though.
Yeah, absolutely. Hey, so I'd be remiss if we didn't cover this one last stock. Tesla broke $1,000. Now it's down to around $995, $996, and that's up from if we just go back to the March lows, all right, it blows you away. It was down to 361. Right.
Well, actually it got as low as 350.
Yeah. Well, closing intraday, it hit 350. Yeah. And now, it has literally tripled from that level. Is that like an example of a parabolic move here?
Yeah. But see that chart? If you take a look at the month of May, it went sideways the whole month. So it was building pressure. It was building a pattern to go through the highs, and the highs in the stock were made, I believe, you have to go back to February, and that high was around 968.
Correct.
So when you put in that basing pattern, you're looking to push up through the old levels or at least into them. And it got above there on a closing basis yesterday. So Tesla, believe it or not, it's overbought on every metric right now, so you couldn't touch it. But if it pulls back in a correct form, it could be a buy again.
Wow, that's amazing. And we're not even talking about the fundamentals of the company. It's a fascinating company. We don't care about that. But just the price movement from if you look at the 5-year chart, that is a real study in parabolic movements, because at September 1 of 2019, it was at $241 closing. And from that point, it's gone up, it's quadrupled, almost quintupled from just really less than a year ago.
It's been an amazing move. And I want to point something out this week that occurred this week. Ron Barron, who's a major shareholder of Tesla, he owns probably, he has probably a couple $1 billion worth of stock, much, much lower. And he was out touting the stock, saying the stock can go up tenfold from here. And, that's just another telltale sign that, the stock is getting a little parabolic. And then you went up above the 1,000 level. That's a whole round number. That's a big stop sign, too, to say, hey, we might need to pause here. But, Tesla's had an incredible run. The trend is up. It is definitely parabolic on the larger time frames, meaning – the monthly charts, quarterly charts, and things like that. So, but if it works off that overbought condition, it all depends on how it does that. The stock actually can set up again down the road and go higher. I would not be a buyer of it at this level, though.
Hey, well, interestingly enough, the volume peaked when it hit, just looking on the chart here, it peaked. Lately, the volume has been down in Tesla while it's been going higher. So that's a potential red flag, isn't it?
Well, when the volume is low and the stock goes up, that's okay. What you want to watch for is when the stock is up and it has a high volume session and it reverses. And I'll give you a great example of that. If you take a look at, say, April 30th. April 30th candle or April 30th bar chart, whatever you're using, it doesn't really matter. They're both pretty similar. You'll see that the stock traded 28.4 million shares. It gapped higher and then it reversed. And it only led to a 2-day decline. But if you look at basically when it peaked out in February 4th, 2020, stock traded, 60.9 million and it, gapped up. It went as high as, I believe it was $969, and then it closed all the way at, $887. That was a good indication that thing is getting top heavy. So, you always watch for a big move in volume at an extreme high and then look for that reversal to occur in the same session. That's always a telltale pattern that things are really top heavy here.
Yeah, especially when you see a stock move like that. I mean, actually, if we go back to May 1st of 2019, Nick, it's shocking where it was. It was like at 100 something. Yeah. Yeah.
It made a low that day of $177. I mean, it's pretty incredible, and that was the low. And then the stock took off and did some backing and filling. You see how it went up though? If you take a look at the May low at 177, it rallied up into the July 24th timeframe of around 266, and then it backed off, went down to 210 and made some higher lows, and then it really, broke out to the upside. Yeah, it ripped and never looked back. Yeah. But this is how markets work. You think, you get a day like today where we're down 1,000 points. I mean, this is just profit taking going, from the institutions after a big run. They need a reason to take some profits off the table. So they'll use all the reasons we hear today, and that's, they'll blame the president, they'll blame COVID-19, they'll blame something. But again, it's just a technical chart pattern that says, hey, these markets have had a hell of a run, and now they're looking at really, coming back in a little bit, and they'll give people a chance to reload. I have lots of levels lower, but for me, it's not only about the levels, it's also about the pattern. And, we put those two together, you get a really good 1-2 punch.
Great point. And we'll leave it at that, Nick. But tomorrow, 5 rules, your top 5 rules for trading. We got 2 of them already. Don't gamble. Don't chase markets at highs, but 3 more. And hey, go over to Nick's site, inthemoneystocks.com. See his record. It speaks for itself. Check out the Twitter feeds at ITMS and at Nick Santiago01 and at Kerry Lutz. And email us with any questions or comments or post it on the YouTube or whatever platform you're on. And Nick, we will resume. Oh, and of course, the email address is kl@kerrylutz.com. Nick, we'll start off where we left off today tomorrow.
Sounds good.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.